Almost 2,600 years ago, the first gold coins were minted and used for trade. Later on, people started storing their gold in well-guarded vaults and bought goods and services using the receipts given to them by those running the vaults. Pieces of paper they could always exchange for real gold. That's how paper money first appeared, and things evolved from there. Initially, most currencies were pegged to gold directly, as the name gold standard suggests. People could walk into a bank and exchange a piece of paper money to gold. After 1945, however, this changed. Currencies were pegged to the dollar, which was pegged to gold at a rate of $35 per ounce. Individuals were no longer allowed to exchange paper money to gold, but central banks were. However, countries such as France ended up no longer trusting the US dollar and started converting their dollars to physical gold. The gold reserves of the US were getting depleted quickly, so President Nixon stopped allowing that. He took the United States, and thereby the world, off anything even resembling a gold standard in 1971. At this point, the money we use isn't backed by anything tangible. Fiat currencies, as they're called, are basically backed by confidence. The dollar is backed by the confidence people have in the US, the British pound by people's confidence in the UK, and so on. The value of one currency compared to another therefore fluctuates continuously. Confidence-driven supply and demand, if you will.
And now we're going to the sacred cow of save money. And in 1971, President Nixon took the dollar off the gold standard, basically took the world off the gold standard, and money was no longer money. So people are no longer saving money. So just to reiterate again, this is $300, what an ounce of gold was worth in the year 2000. So Kim, lift that. Okay. All right, and so this here is 1 ounce of gold in the year 2010, and it's now $1,100. And this is why people are working so hard.
I can do it, I can do it. Yes, I can do it. Barely.
So the big reason I've said in my books for years that savers were losers is very simply because in 1971, the dollar stopped being money, it became debt. Right, Mike?
Yeah, the rules all changed in '71. Before then, somebody, when they became working age, they could expect to put away 10% a year, and by the time they got into their 60s, they could retire on their savings account and expect to live off that interest. And in '71, everything changed, and they started creating currency on a massive scale.
Worldwide.
Ever since then, worldwide. And that is what causes inflation and the loss of purchasing power. So people thinking that they can retire, back in the 50s, if you got $100,000 or $50,000, you could retire on that.
So for my mom and dad, the World War II generation, the industrial age generation, it was very smart to save money. For our generation, the baby boom generation and on, saving money could be the most stupid thing you can do because the system is stealing your wealth through the very thing you work for called money, which is not money anymore.
Right. Real money is actually gold and silver. Money has to maintain its value over long periods of time. Currency doesn't have to.
And this is historically, has always been, for thousands of years, this has been money.
5,000 years, this has been the predominant currency. It became money when somebody minted it into coins in Lydia in about 680 BC. And each unit had the same buying power as the next one. They became interchangeable.
So let me ask you this. This printing of money out of just paper, this has been tried before, hasn't it?
Many, many, many times, and there's always one result. You get far, far higher prices of everything, but especially real money. When they start creating a whole lot of currency, eventually gold and silver lie in wait. And then when the public senses this inflation of retail prices that is caused by inflation of the quantity of currency in circulation, they rush back toward gold and silver, and they have for 5,000 years.
So name some governments that have attempted to print money.
The Weimar Republic. I don't know what I just did with that $100 trillion bill.
He's got a
The Zimbabwe, yeah.
Look at this one.
This is the most recent, a $100 trillion note. This is the largest note ever printed, 100 trillion.
And this was printed in 2000.
Yeah, but when Zimbabwe was created as a country when it went from Rhodesia to Zimbabwe, they were, the Zimbabwean dollar was on parity with the US dollar. One US dollar was the same as a Zimbabwe dollar. This doesn't buy anything today. It doesn't buy a cup of coffee.
What, doesn't even buy a cup of coffee?
No. In fact, they have ruined it by putting ink on it. You can't write you can't write a list, so it would have been more valuable at this point if it was blank.
Right. See, the Greeks did the same thing when they started clipping coins. They just take the silver off of it. The Romans tried it, the English tried it, the Germans tried it, the Chinese tried it, and now the US is trying it.
Yep.
And so that's why saving money is probably the biggest mistake you could make right now, because today money is no longer money. It's now debt.
I can vouch for that because my leg is now numb.
So all currencies throughout the world are in trouble, the same way this Zimbabwe dollar is in trouble. And that's the problem with saving money. After 1971, it was no longer money.
More than 70% of all the currency on the planet is US dollars.
If the US dollar goes, the world goes with it.
I'm preparing by getting fully diversified. I buy both gold and silver.
Well, our next guest is best known, I should say, as the author of Rich Dad, Poor Dad, one of the most well-known personal finance books. And by the way, he doesn't recommend going near the stock market. Let's bring in Robert Kiyosaki, who's here in Singapore with me, and he's here in Singapore to speak at the Masters of the Century conference. Great to have you with us, Robert. You started getting into finance by melting down your toothpaste and looking at the elements out of that, speaking of minting new millionaires. So tell me, what is your strategy? Because you don't like the stock market.
No, I'm saying the stock market's at all-time highs, and I don't doubt they minted half the new millionaires. The question is, will you hang on to that money? Because never in the history of the world has the stock market been this high, floating on debt, and most of the American credit it's on corporate credit right now, and many AAA companies like General Electric are now BBB, one level above junk. So it's floating on all this fake money, as I call it, and that's my concern. So I'm glad people are getting rich, but there's a lot of people, when this market comes down, and it will get wiped out.
One of your main strategies, and I guess how you've worked out your wealth as well, is by taking risks, and as they say, fortune favours the brave. But you're also really heavily invested in some of the stalwarts, the likes of gold and the like. So tell somebody, you know, what some of the strategy could be when you look at a lot of different asset classes, because we know that you've kind of got to have your finger in a few pies.
Right. I always recommend to invest in what you love. I love real estate. I love gold and silver. I've started a gold mine, a silver mine, taking them public on the Toronto Stock Exchange, and I just love oil. So I'm only investing in what I love. I love being an entrepreneur, and I really never had a job, so I'm just doing what I love. If you love stocks, invest in stocks. If you don't love stocks, invest in something else, you know. But I like gold because gold is God's money. You know, gold and silver have been here since the earth was formed, and it'll be here long after we're all gone. So gold will always be here no matter what the markets are doing. So that's why my foundation is gold, the second layer is real estate, and the third level is intellectual property of patents and things like this. That's my wealth. So.
It's interesting, Robert, that you say that savers, quote, are losers and nobody gets rich by saving. Discuss.
Well, it's what you save. My book, Fake, you know, fake money, fake teachers, and fake assets. In 1971, President Nixon took the dollar off the gold standard. And most people don't know what that means. Well, it means the U.S. government could print as much money as they want. So why would you save money? You know, so it did good, you know, for 71 till 2008, it worked. The market kept going up on all this fake money. But the moment it starts to come down, you get wiped out. But at the same time as the market was going up, interest rates were coming down. So the value of your money was coming down, and the volume of money was going up, and interests were coming down. That's why I say savers are losers. So today, you know, there's 14 or 17 trillion dollars in cash earning negative interest rates. This has never happened before in the history of the world. So why would you keep saving? I just don't understand it.
You like real estate, you like gold. You were saying gold, has always been here, it's always going to be here later. What do you think of some of these new assets that are sort of still being created? So in the cryptocurrency space, the like of Bitcoin, Ethereum.
I think it's so interesting. This Bitcoin stuff, they're taking on the Fed. Do you know what I mean? They're taking on one of the most powerful banks ever created. And they're messing into their territory. That's like me taking on McDonald's. They're going to step on me. So I think I'm here in Singapore. I know Singapore is adopting to crypto or what's they call blockchain technology. So I think it's a very exciting time. Personally, I'm a Technosaurus Rex. I can barely use a cell phone. So I'd best stay out of cryptocurrencies. But if you're a young person and you like crypto, it might be your place. Again, everything is just do what, or invest in what you love. I love businesses, I love gold, I love silver, I love real estate. I love using debt as money because in 1971 the dollar became debt. And I love paying no taxes legally. But you can only do that if you know what you're doing, have good attorneys and good accountants.
Robert, final question from me here. Just a corollary of, you're saying how to prosper, how to predict. So tell us, get your crystal ball out. What is next? What is going to happen? What are the asset classes that you're looking at?
That's a really great question. I have 2 books coming out for 2020 because things are really heating up. One is Ravens with Jim Rickards, a very, very prominent guy in America. He's at LTCM, the CIA, and the Defense Department. But the second book is Who Stole My Pensions? Because in 2008, what brought down the market was the subprime debt market, the derivatives. What's going to bring down the next market are pensions. America's pensions are woefully underfunded. And so right now, that's what's driving the stock market up. So it's ironic for my generation, the baby boom generation, we don't have retirements. And they've been buying these really high risk investments from Wall Street, and that's what's going to bring down the next market crash. I think 2022 to 2025, if I was a gambling man.
And you always say, Robert, threats are opportunities, so perhaps anyone listening can listen to some of your concerns and threats and see them as opportunities.
Correct.
Congratulations, Mr. and Mrs. Parker, on your retirement. We'll be happy to cash out your retirement account today, just a few of the details. Great. Now let me go get your money. There's a little bit more. Okay, 5, 10, 15, 20. That's it. Now don't spend it all in one place.
Invest in something real.